Alright, let me hit you with this number. In early 2025, the average home price across the US just passed $420,000, a record high. And in some metro areas, prices have jumped more than 50% since 2020. Buyers are panicking, investors are circling, and entire neighborhoods are transforming overnight. So today, we're counting down the top 10 US cities where home prices are exploding in 2025, and where buyers are absolutely freaking out. Some of these markets might shock you because a few years ago they were considered affordable. Not anymore. Hey everyone, welcome back to the channel. If you follow the housing market or you're thinking about investing, this is where we break down the real numbers and trends that shape your decisions. Make sure you hit that like button, subscribe, and drop a comment below about where you think prices are going next, because today's list tells us a lot about where the future of American real estate is heading. Now let's talk about what's really going on in 2025. We're seeing a perfect storm of economic momentum and scarcity. Mortgage rates have cooled just slightly, hovering around 6%, but inventory remains brutally low. Millions of millennials are still trying to buy their first homes, and baby boomers? They're not selling. Add in investors, snapping up single-family homes, and the result is an upward spiral that's pricing out entire segments of buyers. But here's what's wild. 3 of the fastest rising markets in 2025 are in states that used to be affordable just 5 years ago. So if you've been dreaming about relocating for cheaper housing, think again. Those budget cities are turning into bidding war battlegrounds. Let's kick things off with number 10 on our list. A city that's gone from up and coming to unbelievably expensive in record time. Number 10, Tampa, Florida. Tampa's housing market has exploded thanks to corporate relocations, tech startups, and retirees fleeing higher tax states. As of 2025, the median home price in the Tampa metro area is around $465,000, up roughly 14% year over year. What's fueling it? Sunshine, no state income tax, and a surge in population, especially from the Northeast and Midwest. It's gotten to the point where cash offers are common even in the suburbs, and new construction can't keep up. If you live in Tampa, you already know, affordability is slipping fast. But if you bought here 5 years ago, congratulations. You're sitting on one of the hottest equity gains in the country. Don't forget, if you're enjoying this deep dive so far, tap that like button and subscribe for more weekly breakdowns like this. Okay, moving on to number 9, Miami, Florida. This market has long been one of the hot spots, but in 2025 it's hitting another gear. International money, luxury condos, and a lifestyle magnet effect continue to drive prices upward. Recent data indicates that the median home value in the Miami metro area is hovering around $720,000, with certain submarkets well over $1 million. What's pushing it? First, foreign capital. Latin American and European investors continue to view Miami as a safe harbor and a luxury play. Second, waterfront scarcity. Direct access to ocean beach frontage simply can't keep up with demand. Third, relocation and remote work trends have boosted demand from higher income buyers, both domestic and international. Now for you as a viewer. If you're thinking about buying in Miami, you're not just competing with local buyers, you're competing with global capital. That means bidding wars, escalation clauses, and luxury-level pricing bleeding into typical homes. And if you're watching this and wondering whether there's still room to invest, yes, but you'll want to pick micro-markets wisely, non-luxury, secondary neighborhoods, or look at multifamily. Don't forget, if you're finding this info useful, hit like, drop a comment, and subscribe so you don't miss more deep dives like this. Number 8 on the list is Denver, Colorado. Home to a mix of outdoors lifestyle appeal, tech migration, and limited land supply, it's no surprise this city is showing up now. In 2025, the median home price is sitting around $685,000 according to recent reports. What's interesting, Denver is a case where demand is still strong, but affordability pressure is starting to bite. Younger buyers looking for value are being priced out, and investors are circling. Also, land constraints and zoning issues are limiting new supply, which keeps upward pressure on pricing. For you, the takeaway. If you want to be in Denver, you'll likely have to be willing to explore the outer suburbs or consider smaller home footprints. Expect competition and faster decision-making. Quick reminder, Hit subscribe if you're enjoying the video. It helps me bring you more of these insights. Coming in at number 7 is Nashville, Tennessee. The Music City boom isn't just lyrical, it's very real in home price growth. The median home price here is now around $630,000, up about 11% year over year in many neighborhoods. Why Nashville? A few things. Job growth in healthcare and tech, especially from relocating firms. Migration from higher-cost states, especially California and the Northeast, and a strong cultural brand that draws both residents and investors. Here's a key insight. For buyers who entered Nashville 5 years ago, equity gains have been substantial. But the same factors that made it cheapish are fading, so your window to get in before the explosion is closing. As always, don't forget to like the video, comment your thoughts, and subscribe so you can stay ahead of these markets. At number 6, we head to the Northeast, Boston, Massachusetts. This isn't just another city with academic prestige, it's one where limited land, high incomes, and housing scarcity converge. In 2025, the median home price in many parts of the Boston metro now crosses $800,000. Why this matters? Boston's appeal hasn't waned. Top-tier education, biotech and healthcare jobs, global talent flows, all these keep demand high. Meanwhile, the old housing stock and local regulations limit new supply, so upward pressure on pricing remains. For you as a viewer, buying in Boston means playing in a high-stakes market. The entry cost is steep, but so is potential value stability and appreciation. If you're investing, consider rental markets in suburbs infill rather than ultra-luxury. You see the pattern? If you haven't hit subscribe yet, do it now. You'll thank yourself later. Now we're cracking the top 5. And of course, Los Angeles had to make an appearance. The city's mix of entertainment money, tech, and international investment keeps its housing market on permanent overdrive. In 2025, the median home price in the greater Los Angeles area is roughly $1.15 million, with some enclaves, Santa Monica, Beverly Hills, and parts of Pasadena, averaging well above $2 million. Why? Supply is locked. Zoning restrictions, geography, and demand from high-income earners combine to make this one of the tightest markets in the country. Even as interest rates fluctuate, cash buyers and investors from abroad keep prices buoyant. If you're watching from LA and you already own property, congratulations, you're sitting on gold. If you're trying to break in, your best move is creative. Smaller multifamily, house hacking, or co-buying models. Those are becoming the new entry strategies here. By the way, if you're finding this breakdown helpful, please hit that like button and subscribe so you don't miss the next housing trend deep dive. Number 4 is San Francisco, the OG of outrageous pricing. After a brief cool down during the pandemic, tech has roared back, and with it, the housing market. In 2025, the median home value in the Bay Area is now around $1.45 million, and single-family homes in the core city routinely clear $1.7 million. Even modest condos have rebounded to pre-pandemic highs. Why the rebound? AI-driven startups, green tech jobs, and a continuing influx of venture capital. Remote work didn't empty the Bay Area, it just rebalanced it. And now, with hybrid work, buyers want both proximity to the city and space, which is pushing up prices in surrounding counties like Marin and Alameda. If you're watching from the Bay, drop a comment. Are you seeing bidding wars come back? Because reports say we're right back in that territory. Number 3, the Big Apple. New York City's real estate market has shrugged off every prediction of decline. As of mid-2025, Manhattan's median sale price sits around $1.5 million, Brooklyn's around $1.1 million, and even Queens is averaging over $750,000. International buyers are back, luxury rentals are surging, and Wall Street bonuses haven't exactly slowed down. What makes NYC unique is its depth. There's always demand. Whether it's foreign capital, finance professionals, or creatives moving back for opportunity, the city's magnetism never dies. The biggest issue? Inventory. New construction can't keep up with demand, and co-op restrictions make turnover painfully slow. If you're investing here, remember, it's not just about price, it's about time horizon. Long-term holds, smart financing, and neighborhood awareness are everything. Before we move into the top 2, quick thank you to our sponsor, NewSilver. If you're serious about flipping homes or scaling your rental portfolio, NewSilver is the modern lender for real estate investors. They offer fix and flip and investment loans with lightning-fast approvals, transparent terms, and tech-driven underwriting that helps you act fast in this ultra-competitive market. I've personally seen how having capital ready can make or break a deal, and NewSilver gives you that edge. So, if you're ready to invest smarter in 2025, check out the first link in the description below to explore NewSilver's fix and flip or rental loan options. Supporting them supports this channel, and it helps me bring you more weekly real estate insights just like this, so thank you for checking them out. Alright, number 2, San Diego. Sunshine, biotech, beaches, and one of the strongest job markets on the West Coast. As of 2025, the median home price across San Diego County is about $1.1 million, with neighborhoods like La Jolla and Del Mar well past $2 million. Supply is tight. Coastal zoning and military land limits keep inventory low, and demand from both professionals and retirees stays high. What's special here is stability. Even when national markets wobble, San Diego's prices hold because the lifestyle factor is unbeatable. If you want surf, safety, and schools, you pay a premium. Buyers are still competing with investors on every listing, and the short-term rental market keeps luxury condos fully valued. Bottom line, paradise costs money, and San Diego proves it every single quarter. And at number 1, no surprise to anyone who's checked Zillow lately, Honolulu, Hawaii. In 2025, the median home price across Oahu has blown past $1.3 million, and single-family homes in the city average closer to $1.8 million. Honolulu combines limited land, strict zoning, and global appeal, making it the most expensive housing market in America. The challenge? Locals are being priced out at an alarming rate. Out-of-state buyers, foreign investors, and retirees have made ownership almost impossible for the median family. But for investors or second home buyers, the market remains rock solid. Demand for paradise doesn't decline. If you've ever wondered what true supply scarcity looks like, Honolulu is it. Finite land, infinite demand. So, did your city make the list? Or did you expect a completely different top 10? Let me know in the comments. I read every one of them. And if you're sitting there thinking, there's no way I could ever buy in any of these markets, don't worry. I've got you covered. Here's the takeaway. Across America in 2025, home prices are being driven not just by demand, but by migration, tech growth, and scarcity. Whether it's Tampa or Honolulu, each of these cities tells a story about opportunity and risk. If you got value from this breakdown, please like, subscribe, and share this video with anyone following the housing market. And before you go, my next video drops later this week. Top 10 affordable US cities to buy in 2025 before they boom. We'll explore where you can still find value and growth potential before the next wave hits. So make sure you're subscribed and notifications are turned on. You don't want to miss it. Thanks for watching. See you in the next one.